So before we get started in today's lesson, I do want to congratulate the bulls because they truly deserve it. Every single 30-minute candlestick today was green. There was absolutely no reason to do puts if you would have listened to what I said in my videos yesterday. Some other notes to keep in mind is I have been consistently saying that the bears were going to get trapped at 432 to 430 range. The exact low of day was 432 today. I've also been saying if you want to do put options, I wouldn't recommend it, but if you want to try puts, you need to wait for the SPY to fill a gap. You need to wait for the SPY to the key resistance level, break above the high days, and you need to wait for confirmation, which is a 30-minute red candle. If you visually look at the chart, there was absolutely no reason if you trade the 30-minute chart to buy put options and short the SPY today. Every single green candle, every single 30-minute candle was green. I posted in my video yesterday, the bull trap, meaning where SPY can have a pullback, is at 436.50, where the gap is waiting to fill at 436.50, and surely enough, that's where the first 30-minute red candle formed. Are you kidding me? I am saving bears for a living. And for those of you who lost money holding puts, you truly do deserve it, my friends, because I've been warning you guys about all the dip buying opportunities that have been banking at our key support levels when the 30-minute flips green. And I made it very, very clear, the worst thing you can do in this market is to focus on buying puts and shorting the SPY at key support levels. And this was a level that we called out weeks in advance that we've been waiting for and banking off of, which was our 432 level. I made it very, very clear in terms of our watch list this week. Let me show you and look at some of the analysis today. Look at this. NVIDIA and SPY is going to moon. My price target for NVIDIA was at $418. That was at 11:30 a.m. when NVIDIA was towards the lows. I said SPY was going to 437 shortly after that. And then right here, in terms of the overall analysis, this was at 12 p.m. The pattern I see on the daily chart confirms that we can close strong at the highs. Today should be an uptrend day where buying dips banks, avoid puts if you love the trend. The overall watch list and the analysis, and I was preaching this, man. Past 11 a.m., I was preaching this on. In terms of our morning watch list, our top watches are going to be Lucid and Space Call Options. Both of those stocks ended up taking off. Very bullish on the SPY at key support. Our key support levels in terms of the watch list that I sent out Monday, as you can visually see right here, I made it very, very clear that the best price to buy the SPY and to buy the dip was at $432. The best level is $432. This is today's lows. This week, we will see $439. The target for this week was $439. All this played out, man. As a team, as a whole, as collectively, this was a very successful day. I saw a couple people mention that they ended up making 5 figures on the day. We had some big hitters. 50 people went green, 6 people went red. The point is, there was absolutely zero reason to do put options or short the SPY if you use the 30-minute chart, because every single 30-minute candle was green. You have a strong bullish bottom wick at our 432 level. How did we come up with the 432 level that we've been talking about for over a week now? This is where the craziest bear trap and the craziest breakout was triggered. As you can see, 432 used to be resistance and the bulls got trapped at this resistance level. SPY had a pullback. Once the SPY broke above 432, it had a massive multi-day breakout. It was a multi-day runner and it triggered at 432. And you have to know where it triggers, because when it goes back down to the level where it previously triggered at, that's where it's going to try to trap the bears again. Because the most likely outcome on a stock is when it breaks above a resistance level and it's a multi-day runner and it has a massive breakout and it has an overreaction to the upside. If it drops back down just as fast as it went up and having an overreaction from the upside to then the downside, the most likely outcome is it is going to bottom at the previous resistance level 432, because this is where the bears got trapped and this is where the crazy overreaction, breakout, and gap up was triggered from. So this previous resistance should react as a support, because SPY had a 12-point breakout to the upside, and if it's just going to get crushed right back down, that's when the crazy bear trap and the crazy breakout is finally going to trigger. And not only that, but the bulls have been hinting that it's coming. And the reason why I say they've been hinting that it's coming, the overall trend on the SPY for the past month plus has been bullish. But not only that, SPY has been bouncing off of every single dip that has not been tested, or every single key support that was tested twice. ended up bouncing. There was very nice support right here at $435. We hit this one with the green bullish 30-minute candlestick, and it had a nice reversal for scalpers. There was a nice bottom wick right here where a massive bear trap was triggered, where the bears got stuck holding their puts and their losses. And then as you could see, the first time it was tested at 433.50, the bulls stepped in with the green bullish 30-minute candle, and then it began to uptrend on the day. And then right here at 432, surely enough, they're already given the signals. It kept on bouncing and forming bottom wicks. Are you kidding me, man? Look at the first time SPY reacted at this 432 level. It instantly recovered and spiked multiple times. And today was the day where the bears finally got thrown in their coffins, man. This stuff is highly predictable, and you guys need to be aware of trends. But I do want to make it very, very clear. For those of you who did end up buying and holding puts today, you truly do deserve it. You don't know what it is that you're doing. You don't know how to read trends. You don't know how to read patterns. Now, why is this something that I say? Because I didn't mention this in yesterday's video. There's always new and important updates. But why did I say, if we go back to, what was it? Avoid puts. If we type in avoid puts, why did I say this? Why did I say this right here at 12 p.m.? The pattern I see on the daily confirms that we can close strong at the highs. Today should be an uptrend day where buying the dips bank, avoid puts if you love the trend, should be a very strong bullish close. And then I issued a 437 price target after that. Why did I say that? The reason why I said that was I was beginning to get confirmation on the 30-minute chart that this daily pattern that I caught eyes on was repeating itself. So take a look at this. As you can see, the high of this is $432. When the bulls broke above 432, this ran all the way to 433. And then the next day it ran all the way to 437, right? So very bullish move if 432 reacts as support. So once I began to realize that early on the 30-minute candles were green and it was forming those bullish 30-minute wicks towards the 432 level, I was telling myself, okay, SPY's trying to react bullish. There's no reason for puts. And if you watch my video, I made it very, very clear. If you want to do puts, wait for the gap to fill, wait for key resistance to hit, wait for it to break above the highs, and you need a 30-minute red confirmation. There was no 30-minute red confirmation. Now, with that being said, what was the pattern that I noticed? So that led me to being bullish in a confirmation sense. That was my confirmation that this pattern was going to repeat itself. Now, what was the pattern? This was the pattern. I want you to compare these three daily candlesticks. So first off, you have like two slanted downtrending red candles, right? And then what happens on the third day? You have a super green bullish daily candle. And then you can see right here, you have like two slanted sideways down candles, right? I see this happen all the time. Save this pattern. It works on the 30-minute chart as well. This is extremely bullish. If you're seeing like two slanted sideways candles like this and two slanted sideways candles like this, and then you're getting some sort of confirmation. So again, what was the confirmation? That it was going to have this green bullish day like it did on the third day. The confirmation was it bounced off of 432 and every single 30-minute candle was consistently green, meaning they're already going for the strong bullish close. It's bottoming at the key level. All the 30 minutes are green. It's trying to confirm that it's trying to close strong, and you do it one 30-minute candle at a time. But you could just visually see on the third day, you know, after it had these two slanted candles, it would retest the high of this wick and it would have a strong green bullish day. And then you can see on the third day, it retested the highs of this wick and it even went higher to screw the bears. And that was all predictable in a sense. History repeats itself in similar cycles. But the point is, it closed strong and green and bullish towards the highs on this day. Was there differences? Yes, there was difference. On this day, it went lower than the candle. Today, it didn't go lower than the candle. And today, it actually went higher than it did on this day. It basically went higher and had a bigger move to the upside. There's going to be some similarities. History repeats itself in similarities. Not to the exact T, there's similarities. And there's ways to confirm if it's going to close strong. Because if you just looked at the 30-minute chart, and we were laughing at bears, believe me. The entire chat was laughing at bears. I had bears so heated at one moment in the chat that they decided to mute me. And that's great. To all the people who mute me, all the power to them. I truly hope you are trading the chart because you should get to a level of education where you don't need anyone in terms of your trading career to help you out. Because, you know, if you're interested in terms of what I'm doing, all I'm doing is trading the chart. I'm just the voice for the chart. And if I'm not the voice for the chart, then that means I'm not trading accurately for the day. Something's off, something's wrong. You can't be perfect 100% of the time. But, you know, it truly is narrowed down to nearly an exact science almost every single day. But this just goes to show you, man, the power of 30-minute charts. Losing can be a choice. If you look at this chart and say, okay, The daily pattern that I just brought awareness to says the third day can be a very strong green bullish close. And we know 432 is where the bears got trapped. And we tested 432 and we formed a very nice bullish 30-minute wick. And we also know SPY loves testing the high of these wicks. There was wicks on the daily to be tested. There was multiple gaps to fill above. Bulls have been giving the hints because it keeps on spiking at all of our key support levels that the bear trap was coming. And it finally hit, surely enough, when the best price hit that nice 432 level. But the point being is, if you are blindly doing puts into these green bullish 30-minute candles without a confirmation, then you truly do deserve to lose money, my friend, because it doesn't have to be that way. Imagine having the information where the daily chart is saying, it's probably going to close strong at the highs because that's what the daily pattern said. And then you have the 30-minute chart telling you that it's happening. And if you're seeing that it's happening early on and it's bottoming at the key levels and every 30 minutes is green, that should give you the confidence to continue to scalp with the trend, to keep buying the dips and selling the rips, or to hold with the trend a little bit longer. You can take it one 30-minute candle at a time. You scale in, you scale out. You scale out on the rips, you get back in on the dips, or you can leave some runners to ride, right? Not every day is going to be like this, but the point being is, if you've been studying and listening to what I said, there is absolutely no reason on why one singular person who's been watching my videos for the past 5 days did puts or even got trapped in puts today. For the most part, everyone should either be green or just not doing puts in general, because we made it very, very clear on the overall trend for puts. The bull traps have been happening and SPY has been topping out when it breaks above the high of day. So if it has a dump at the open and then it breaks above the high of day, it forms a trend reversal candlestick or a 30-minute red, then it has a small drop. Breaks above the high of day, forms a 30-minute red, then it has a small drop. Breaks above the high of day, forms a 30-minute red, then it starts to drop. Breaks above the high of day, forms a 30-minute red, then it starts to drop. Breaks above the high of day, forms a 30-minute red, then it starts to drop. As you can see, it broke above the high of day, but it never filled the gaps until here. It filled the first gap at 436.50, and it never formed the red 30-minute candle. So what is your reason and what is your excuse for buying puts? If you are someone who lost money consistently holding puts today, you truly do need expert guidance and you need that team and you need that third eye. You truly do need it, man. So with that being said, if you do want to join Trader Society, man, it's the first link down below in the description. If you want to crush it and you want to take your trading to the next level, the first link to join is in the description. Based off of the past 5 videos and analysis that I've been giving out, I do believe most people should have been able to recoup and make the cost back of the program, because this information that I'm putting out was truly valuable. Everything worked out to a T. Now, with that being said, in terms of tomorrow, based off of what I'm seeing tomorrow, we could be setting up for a move down. Based off the daily chart and how I'm looking at this daily chart right now, it is saying we could potentially drop. But I'm not going to let that bias me, right? So like today the daily chart was telling me that it was going to close strong at the highs. It took me some time to figure out and confirm that, because you need to wait for price action to play out and for patterns and trends to develop instead of just trading and gambling the first hour. It's a complete train wreck typically because the chart's less developed, right? But the point being is, based off of this daily pattern and how this looks to me, it does look a little bearish visually, but I'm not sold on the idea of just buying puts. This crazy bear trap just got created, and I'm not sold on the idea of just buying puts yet. I would be extremely careful and extremely meticulous if I were buying puts, and I'm not going to blindly trade a pattern and let it bias me. I'm going to use confirmations. So I explained to you that 432 level in the bullish daily pattern. Now, what could be a confirmation? Well, a confirmation was you had a very nice green bullish bottom wick at 432, and then it formed a higher bottom wick at the previous resistance, which means it's going to continue to go up. This is all bullish. There was no 30-minute red, right? Based off what I'm seeing, it could have a pullback. It could have a pullback. Also, we have Powell speaking tomorrow, so we got to see what happens with that. I don't want to hold anything through that type of news event situation, stuff like that. We'll see what he says. But with that being said, man, we could be setting up for a small drop here. So we just need to understand what just happened. The bears got absolutely destroyed and they got trapped. And I warned them, man. I made it very, very clear. Type in destroy in the chat room, man. I made it very, very clear. Like I said, we had a couple bears mute me because that's how fucking good like everything was just going with the bulls. Let me see. All right, give me 1 second, guys. Let me see if I can find this here real quick. My God. So, my bad. I just got this new keyboard. Okay, so right here, this is where I said it, man. Yeah, next 3 hours, the Bulls will destroy all of their puts. We made this very, very clear. This was it. This was it here, right at 11:40 a.m. Today is the day where the Bulls will destroy the Bears. Don't be stupid holding puts, man. Like it was a free money call day, man. But anyways, based off of where we are in the market, you need to understand the Bears just got trapped. So W Bulls, super bullish, good for them. Based off of how the daily candlestick looks to me, it looks like we're due for a small pullback. Now, what we need to understand is this is what we need to understand in terms of price action and confirmation, right? So we're not blindly biasing trade in a pattern. Just because the daily chart to me looks like it's gonna have a small drop doesn't mean I'm gonna buy puts. I need a confirmation that that's actually gonna repeat itself, and then that daily pattern will give me more confidence on overall direction and where we're closing if I'm seeing confirmations of that history repeating itself. So understand that. So that doesn't matter right now. You need to study the price action and confirmations. So understand this. There's a gap to fill at $436.50. You got this gap at $436.50. This was a previous level where you can see a lot of little bull traps were created. SPY was selling off very, very nicely from 437. SPY was selling off very, very nicely from 436.60. So we do understand the overall trend has been bullish and the dips have been banking. Now, my style of trading for calls, I don't like buying calls at oversold levels. But you have to be extremely careful with puts, even at resistance, because puts have been getting destroyed overall. You need a nice, strong, bearish 30-minute confirmation at a key resistance level, right? So I'm kind of on the sidelines at the moment in terms of making these videos. Tomorrow, I'm going to absolutely fucking crush it likely. But in terms of these videos, I'm a little bit on the sidelines here. So understand, it's due for a small pullback. It filled the gap right here. We have two bearish 30-minute red candlesticks ever since the gap filled, which was the level that I gave out in my title of the video yesterday where the bulls should get trapped, and that's where they're beginning to get trapped. Fucking phenomenal level at this 436.50 gap, right? So we're due for some sort of drop. Now, here's the key. If we see 436 to 437, those are going to be our levels, 437.20 to 436 range. If we see it reacting bearish, it's forming resistance, you can try a scalp on puts. Just be careful, my friends. I don't want to see anybody getting hurt. And then in terms of calls, it's just a little fucking complicated, man. The reason with calls right now, the reason it's a little complicated with calls right now is because the Bears got trapped so fucking badly that the calls are a little bit high and a little bit overbought. But when you're in an overall bullish market, that doesn't matter. It could just keep on going up. Now, in terms of calls, we know the best level is at 431.40. So think about it like this, man. If with the calls and being bullish, be careful with puts. And then in terms of with the calls and be bullish, think of it, it's like the great reset. The bulls absolutely banked. This made people's weeks. This could have made people's months. They had a very awesome day. So what you need to do now is you need to wait. You need to wait for the levels to hit again. So some levels that I like, $432.60, $432, $431.50, and $430. There's a gap at $430, right? Those are all of our levels for calls. So just wait for it to go back down to the overall, bear trap zone, right? And there was no reason for missing out. There was no reason for sleeping. If you've been following these videos, all the confirmation was there. Green bullish 30-minute wick, confirmation for calls. It has a pullback after breaking out. Green bullish 30-minute hammer, confirmation for calls. It's all there, man. There was no red 30-minute candles until the gap level that I gave out, 436.50 yesterday, triggered, right? It's crazy. If you would have just read my title yesterday, 436.50, and hit puts there, you actually would have made some money on puts. It's truly crazy how that works. But anyways, man, you need to understand the style of trading. You need to wait for an oversold level to buy your calls. Fuck the breakouts. We don't buy high. Why would you want to buy calls right here? This is where the bulls were getting trapped. And that doesn't mean you go blindly buying puts here, but do understand that daily pattern to me looks bearish, but that's not going to let me blindly, I'm not going to blindly, trade a pattern, trade a bias. I'm going to confirm it with history, with candlesticks. I'm going to trade what I see, not what I think. Okay, I see something on the daily that says bullish, but what is the 1 minute, 5 minute, and 30-minute chart telling me? Is there telling me there's some sort of confirmation? Oh, every single 30-minute green candle is green. Oh, puts are going to get destroyed. Got it, right? You got to trade what you see, not just blindly trade a pattern. Today I saw a very bullish pattern on the daily chart. Was there confirmation? Yes, there was confirmation. It hit 432, bottom bullish wick. It had a breakout, formed a bottom bullish wick hammer at a higher level towards the previous highest candles, and now support, super bullish, no reason for puts, right? Now, with that being said, Keep an eye on 436 to 437. If that tops out, then it's going to try to pull back to this level. This is the level where they're going to try to drop it to. They're going to try to drop it to right around these levels, 434 to 435. That's where they're going to try to drop it towards those overall levels if it does top out here, right? In terms of the current state of the market, like I said, I've been avoiding puts. All I've been doing is focusing on calls towards the key dips. And that's what I would recommend for most people in the current state of market that we're in. So the key levels to keep an eye on, 432.60 to 432 to 431.50. If you see a reason for puts, if you see bearish confirmations, you see the resistance, you see the bearish candles, keep an eye on 436 to 437. But in terms of overall bearish, the true best levels would be 442 and 439.50. I love 439.50. I think overall there can be a magnet this week where we hit 439.50, but that doesn't matter. I don't trade what I think, I trade what I see. I do think though there could be a magnet where we spike to 439 later this week. I could see that happening. So I will be studying where those bears are going to get trapped again. And you need to understand, I like the oversold levels when I'm making these videos, right? Because I'm trying to lead people in safe overall direction. I'm not saying any of these levels are going to hit. I'm just trying to lead people in overall right direction for when they do hit. Meaning it's either going to go to 442 and 439 and puts will likely work, or it's going to go back to 432, 433 and calls will likely work. In the meantime, you might miss the fuck out trade in the middle, and that's okay. That's okay. I'm trying to make these, videos for the more beginners. And I'm trying to sway you away from trading in the middle of these overall ranges. Now, in terms of my chat room, I'm going to be entering trades. I'm going to be entering trades at different levels that I don't speak about in my videos. They just can't even be discussed. It's just too professional and too much more of an experienced type of approach. I want to lead people in overall simplistic direction when I'm making these videos, like for masses, not for like the super, like more strategic or advanced or experienced type strategy. I want to lead you guys in the simple setups, the best setups, the best prices, the setups where it's just so fucking easy to make money on. Like those are the type of plays that I'm trying to talk about here. So we're in the middle of the channel right now. The bears are going to try to go for the pullback to 435 to 434. If the bulls break above 437, they got the run to 439. If 437 becomes support, then they run it to 439. You could try to put to 439. With your puts, wait for the 30-minute red candle. And like I said, I am not interested in puts in the state of the market. It is saying that we are due for a small pullback. I love the idea for calls at 433 to 432, if not then 430. I love the idea for puts at 439.50 to 440.40. Right now, we're towards the middle of the overall channel in terms of what I'm talking about is the bottom of the channel was 432. The top was at 444. Right now, we're directly in the middle. They are going to try to go for the pullback, but you need to understand at the middle, you need to be extremely careful and safe. With that being said, we're going to absolutely crush it tomorrow. If you do want to be a part of Trader Society, it's going to be the first link down below in the description. If you are serious about taking your trading and your education to the next level, you can join us. It is the first link down below in the description. We're looking for hardworking individuals who want to surround themselves with people who are focused on mastering and trading price action on the SPY and on stocks, with people who are focused on trading the trend as well. It is the first link down below. You will receive access, instant one-time fee, lifetime access. It's a one-time fee. You get instant lifetime access once you join to the chat room, to the Discord server, to the live trading streams, to the live trading voice channel. You also get access to all my real-time analysis, all my watch list. Every single trade that I make is alerted in real time. All the networking opportunities, all the local connections within the chat, the moderators who can help assist you in the right direction as well. With that being said, I'm going to continue to try my best to put you guys in the best trades possible. I'm going to leave it off at that. I will see you guys tomorrow live at Market Open.